Hello traders, Gary Wagner with the gold forecast here, October 29th. It is Friday and this is the weekend review. Gold is trading substantially higher today, trading roughly at $14 up on the day, $13.57, $13.58 in that area. On today's report, we're going to talk about quite a few things. We might have an extended report here, but I will tell you this. This was the breakout, in my opinion, that we needed to see to kind of get through this congestion zone right in here before we see this market begin to move back up. Of course, for traders who have been following us actively, you understand that my greatest aspiration is to be able to provide you with quality trades, profitable trades, and also to be able to get you out of the markets in a timely manner. On this last trade, we went on the basis of an observation that I had that at these particular bottoms of waves, we get this variation of this three-river morning star. We have them all throughout the marketplace. We have seen it basically entrenched within the gold data itself, because if I go back even as far as the beginning of this rally, which is back in February of this year when gold traded at a low of about 1050 right here, as you can see on this particular C wave, as well as this bottom of this A wave here, that we had that black candle, that long doji, followed by a red candle. Now, in the case of this bottom, this was a unique three-river bottom, and I will go into some detail at a later date to explain what that is, but we can see it there, here, here, at this C wave, at the bottom of 2. So it made some sense to me that as the market came down, this is last week, we had this black candle, and I saw this long-legged doji right here, which is now, I will call the bottom of 4, that I issued the buy signal. Now, I felt it was a little bit early because we didn't get really much of this candle here. We really didn't get a confirming candle, which we would have had to wait the next day, but I felt there was such an overwhelming amount of data. There were so many times in the past that we had seen this, that I thought we put a stop in place. If in fact this isn't the bottom, we at least took a very, very strong calculated guess to get there. We did trade in that tight range for the last couple of trading days throughout the week pretty much, because if you recall, this candle here was a week ago Friday. Sunday is when we went ahead and issued the buy signal, and then of course it was reported to Kitco on Monday. So I felt when I saw this activity that where we had the doji and then the candle down, I was wondering, is this going to be the one instance in which we don't see that be a significant indicator of bottom activity? I am ecstatically pleased to announce today that at least tentatively, because we're not out of this trade yet, we do have $20+ in profits, but we're certainly not out. But at least tentatively, I think that we have yet seen another bottom to the market based upon that three-river morning star. Traders, it's also on days like this that I am so excited and so pleased when we look at the combined effort of Japanese candlesticks, Elliott wave, and Fibonacci retracement, because without all three of those components, these last couple of trades really would not have had the opportunity to be executed in the way that they were. We can take a look at that. The one thing is that when we consider that as this market went up, and of course we had a long position in this market, because Elliott wave itself calculated that the top should be right around 1400, and that's based on wave projections. When we saw this top activity right in here vis-a-vis the Andrews pitchfork, and the fact that this was the area that we were looking for the market to come down, it allowed us to quickly and strategically exit that trade at 1365 with profits before really anyone had any knowledge of it. And traders, the Andrews Pitchfork is such one of the unique instruments in terms of trend analysis that I believe can give us great insight, especially when looking for tops. And let's just kind of go over how we place that. We take 3 data points. We look at the beginning of the rally. This is that bottom, so it's obviously got to be wave C. That's our first data point. Our second data point is going to be the next bottom, and that's going to be this C. And then, of course, we simply follow that all the way up to the top of this former high, which is that 1265 area C, and we place that on the top. And lo and behold, when you do that, as you can see very eloquently, we had a good indication that there was a potential for the market to be at a top. Now, that alone wouldn't be the kind of information that we would need to actually exit the trade. So think about it. One, we looked at the fact that this gave us a potential top. The second very strong decisive factor was this engulfing bearish, this candlestick pattern that told us, my God, this could easily be a top in the market. And that's what caused us to exit the trade. Now, in terms of re-entering the trade, the market did trade lower. And what we wanted to do was to take a look as this market went lower to see how it related to Fibonacci retracement. Let me put that up for us on the screen, traders. Traders, what I have done is simply entered our Fibonacci retracement. I have used 2 data points. This bottom of 3 right in here, this is the first data point. My second data point is the all-time record high, 1388, the top of 3. When we do that and we calculate relative distances and tentatively find a little bit of support, as you can see, it traded lower, then opened in the area and traded higher. So at least for that short time, we believed that we could be witnessing something, but we had to see some sort of confirmation. Of course, lo and behold, it did fall the following day. So it fell right to here. The one thing I think that you can see very well is that when it did go to that area, and I'll blow that up for us, traders, when it did go to that area, you can see that it did quite eloquently find support right in this area. And this was a week ago Friday, because on that report, last weekend's report, all we were able to actually see were the candlesticks up to that point, meaning this was the data that we were lacking. So we had this as available candles to us, and this is when, as I did my research, I realized that we had that very similar setup, that same setup as I have seen at the bottom of waves. So what gave us a really good jump on the market was, one, Fibonacci retracement. It allowed us to look for a candlestick pattern at this point. Candlesticks, obviously, the long-legged doji, the 3-river morning star, and then thirdly, the fact that this Elliott wave, when it came down, this wave 4 had gone to the 50% level. So we had 3 separate technical indicators, the 3 that I used together, what I call the technical triad, giving us strong information, all 3 kind of pointing us in the same direction, in this case, the proper direction. So traders, enough of the review, and let's see what we anticipate for the next week and weeks ahead. Of course, we've got not very much time left in the trading market. The market is set to close for the weekend relatively soon. It does appear as though we will be closing up near the highs of the day right in here. As you can see, we are up at the highs, close to it, 1357, 1358. Now, let's do some forward calculations to see where we project this market to go to. Now, the best way to do that is simply to look at wave 1, this wave right here, as our absolute benchmark. Now, this particular line, I am now taking a copy of it. It is what's known as a autoscale or scalable line, meaning when I place it somewhere else, and I'm simply going to cut and place it, that is this line, it is going to show us really the exact move or an equal amplitude of 1, because I am anticipating that wave 5 should be about equal to wave 1. So I'm simply going to place it to the low of that candle, and as you can see, it gives us an upward projection, so that if we see wave 5 equal wave 1, my target right now is $1,420 based on Elliott wave analysis. Traders, we have stops sitting at 1310. We will look to move them. Stay tuned on Sunday. I will give you an indication. Also, on Sunday, if we've got a sizable move and we see follow through, because we've got that Fed meeting and anything can happen then, but if we see some sort of follow through, we are also going to talk about scaling or adding to our positions up in this area to see if we can extract a little bit more out of this rally. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Sunday for the Daily Report. Have a great weekend. Bye-bye.